Well, aloha, everyone. Joshua Hayes at bigwavetrading.com. I hope, and not a lot of people watch my videos, unfortunately, whatever. But I hope those of you that are watching today's video lesson watched last Friday's video lesson because I gave out a warning that today's sell off in the overall market could be coming soon. When does it occur? No one ever knows. No one knows when the market will turn. However, there were two situations developing that made me short term cautious. Was I still taking signals? Absolutely. Was I still getting long with all of my buying power, expecting to make huge gains? Absolutely. Was I making any traction the past week on those new purchases? Initially, yes, then no. And that goes for all of them. And then you have today. So in the last video lesson that I made for YouTube, for the public, we talked about the divergence in JNK and HYG versus the SPY. You will see divergences along the way. When the market is rallying, sometimes JNK won't be rallying with the market, but it's not too often. And then the market sells off, sometimes JNK sells off a little bit more, but they normally move in lockstep. However, when you get deep into an uptrend, and the JNK and HYG have been moving in lockstep with the market, when the market starts to move up and the high yield bonds start to move down, you have a red flag. Now, when does it come into play? It just depends. You can see back last year, the JNK topped in October 2024. The market continued to rally into 2025. Meanwhile, the JNK was hinting that eventually the market was going to roll over. So there we had months before it mattered. It just so happened this time around, it was a week. The sell-off today in the market was foretold by the JNK and HYG, but more importantly, it wasn't just that the HYG and JNK was signaling this kind of divergence. Now, if the JNK goes up and the market goes down, that's bullish. There's nothing there. But when the market goes up and high yield bonds come down, that's problematic eventually. When? No one knows. I don't understand why everybody doesn't understand this, but when you've been around the market and then life as long as I have, you do understand this. You can't predict the exact turn. You can just see the signs that a turn is coming. It just so happened that it was short term this time around. But the most important indicator along with this came with the VIX. Now, I'm sorry that this chart is so noisy. I'll go ahead and get rid of that line there. And actually, let's go ahead and get rid of the comparison now on SPY. So what I've always noticed about the VIX is that it spikes and it has moves up and down and it's kind of noisy, but there's never any real quote concern on my end until I see a certain situation. When the VIX gets the 9 above the 21 EMA and the 21 is above the 50 SMA, then I start to pay attention that there could be a market sell-off. So all during this time, the 9, 21, and 50, they don't exactly line up until you get to this point here in February 2024 or 2027. That's when the 921.50 cross. Initially, there's a spike higher, but then the market moves lower. But notice right here, we get back to the 9 above the 21, above the 50 into the tariff tantrum sell-off. So when the 9 gets above the 21, gets above the 50, that's a warning sign to me, especially if the market's rallying. The market was rallying here February into the end of March. The VIX got that 921.50 stack we sold off with the JNK and HYG already of topping. Coming into today's session, the VIX was well above the 9, the 21, and 50 SMA. So not only were they properly stacked, but price is now riding this line higher than you have today's session. So no real shock regarding today's sell-off. we got the warning signs. You just never know the day. It happened to be this Friday. So I hope everyone watched last weekend's video lesson. If you didn't, go ahead and give it a rewatch or give it a fresh watch. But you will see in that video, I talked about the VIX, I talked about the HYG and the JNK. Now, the actual worst setup for that actually came via then my tickets indicator. So on the VIX with the tickets indicator, not only did we have the 92150 SMA stack, but when you really want to be concerned is when that happens, and after a long period of it being below the zero line on this tickets indicator, which is a proprietary indicator that we have, we get above the zero line. Well, after I made that video lesson on Friday, come Monday, guess what happened? The VIX got that tickets indicator above the zero line. The 92150 were stacked. JNK and HYG were already hinting at today's session. I'm no longer a great trader. Did I hedge properly going into this? Absolutely not. But why didn't I? Because the market was going higher. When the market's going higher and I got new long signals, I would much rather be buying stocks with that capital than trying to hedge with it. It just so happened all hell broke loose on Friday. So interesting setup nonetheless. So now we'll move back to my antiquated telechart version 7 charts because this is where I really see the price volume action the best on the market. So other possible hints that we were going to see a turn. The AAII sentiment finally went bullish. I don't know what the exact numbers are, but I believe it's 55% bulls to 45% bears. That's the biggest, widest margin since the market sell-off in March and April, leading to this rollover that we just saw today in the SPY. Look at the huge volume. After going up for this long, we didn't just have a high velocity sell-off day on small volume or a bit above average volume. The largest volume since the low. You can see it on the SPY. You can see it on the QQQ. You can see it on the DIA. And you can see it on the IWM. Now, the IWM and DIA isn't as bad, which is always a good sign. But the QQQ and the SPY, that's pretty ugly. The velocity of the price sell-off, the cracking of the short-term moving averages with that high volume, very, very ugly. Other warning signs before today. All of a sudden, instead of 2x ETFs, which I love, by the way, I can't wait till we actually bottom in the market to use these, there are now 3x ETFs on single stock. So that's amazing. So now there's 3x derivatives on single stocks. That's great. But another hint that maybe short-term we got frothy. Also, retail buying became the highest since that 2021 top. So there was another hint there that retail finally has embraced this rally with retail buying heavily, AAII sentiment, 3x ETFs being offered. Another hint, though, like I said, was my longs starting to work before rolling over. But overall, those setups, they weren't really A quality, A plus quality. We were getting them even in the middle of September. But here in this last little leg higher in the market, I wasn't getting my A quality 21 EMA bounces anymore. They were either missing it completely and or not happening. So I wouldn't even get pullbacks to the 21 EMA, and or if they did, they just weren't like they were this entire rally off the April lows. They looked different. They behaved differently. They performed differently. So there was just some more mini red flags there. Now, what stocks made my scans today that are of interest? Here's another red flag. Philip Morris. This one was in one of my scans. AES, an electric utility, was in one of my scans. BRO, an insurance broker, was in one of my scans. Casey, a general store, was in one of my scans. And then RYTM and ALNY have the best looks for tight consolidations for stocks that I would potentially buy. Now, I happen to already be long ALNY. I am not long RTY or RYTM, but these have the best looks and they're healthcare related stocks, more specifically biotech stocks. Now, that is one area of the market that hasn't cracked open just yet, but that heavy volume on that reversal kind of tells the tale there that it's also looking weak. But like I said, it's not just the SPY QQQ that hinted at a reversal. There were other signs, and I want you to look at the volume and the price bars. First, we'll look at Bitcoin. Bitcoin broke out, squatted on heavier volume than on any of the up days when it was trying to break out. That then led to today's session. Look at the volume bar. Ethereum, same thing. Attempted a breakout, failed on heavy volume. And this is just a tertiary indicator, BOP, but I want you to notice it was red before that reversal. It's red on the reversal. During this entire uptrend, you don't have that series of red bars in the balance of power indicator. So just more of a hint. But then there's even more. MDY made mention intra-week to members on the video lessons. Looks like it could potentially roll over. It rolled over. I said IYT was looking suspect. Following today's session, it's rolling over. Then, of course, you can see what JNK and HYG now look like. That's not good. And then there was Race yesterday. Race, a luxury, top 1% of the top 1% kind of market name, already had a gap down in weak bounce following its earnings last time. This time around, ugly. And following today's session, follow through on strong volume. Very ugly 3-day weekly chart with that high-end retail stock. Then there was private credit. ARES already breaking down. OWL already rolling over. KKR already rolling over. Then there was the equal weights. RSP was looking good, but after the V-shaped breakout started to squat, breaking down today. Once again, look at the volume bar and then also combine that with the BOP bar. Not good. Then you look at financials, looks like they're ready to roll over. Then we look at FFTY, strong until today, but look at the distribution bars starting to show up in this ETF as it rallies higher. You normally want to see the opposite. Small volume on the down days, green bars on the big up days. Not happening. Then ARKF got that rollover look. So there's a lot of weakness in there. And then for individual stock leaders, the two top stocks in my world based on earnings and sales growth right now, my two favorites, ALAB. ALAB already undergoing a little bit of distribution, was starting to bounce, looked like it could get its act together, and it has not failed yet. It has not failed this low yet, putting in a series of lower highs and lower lows, but another heavy volume down day. Not looking good. If it cracks a 50 SMA, I assume we go back into this consolidation area, possibly base build again. CRDO, not terrible yet, but look at the distribution days starting to pile up as it kind of goes nowhere. If it cracks, these are the leaders in the stock market as far as I'm concerned. That wouldn't be healthy. Then I saw Baidu today. Not good. So we've reviewed a lot of charts in this video lesson, and none of them are good. Oh, I actually forgot MAGs. Look at MAGs. The 7 biggest market cap stocks leading this market higher. Big crack today, big volume, red BOP. So as you've seen, there's not a lot of pretty charts. Is there anything positive to take away after today's session? Absolutely not. Am I bearish short term? Yeah. Those yellow flags that I raised last Friday, they are now red flags. However, I've been looking for a 3%, 5% pullback since last week. We basically already got that. The QQQ is down over 4% after hours. However, with this pullback coming on more insane tariff news, I'm thinking that we could now possibly see a 10% pullback. If no tariff situation would have caused this sell-off, I still would have been looking for my 3 to 5%. Now that we got tariffs involved again, I could see this market pulling back 10%. So just don't be shocked if it does. But make no mistake about it. I'm buying the dip. I'm putting my capital in my long-term account to work. A little bit of capital's been raised. We either got lucky or the timing was perfect. We sold some APP at the top in the long-term portfolio, and it's going higher. How incredible. But we happened to sell some OKLO, which at the time was a short-term top in the long-term portfolio. By the way, my buys in OKLO in the long-term portfolio are sub 10. So that's why I was taking profits there. And an app, I was buying this in March and April. So that's why I was taking profits there. But that capital will be put to work in names like Granny whenever we see a low, in names like TQQQ whenever we see a low. And I kind of want to, in the long-term accounts, kind of want to like get long some beta coins. This is the Grayscale CoinDesk Crypto 5, the top 5 market cap coins. They rotate in and out, whatever enters the top 5, that's what they have. So like Solana, Cardano, things like that. As they move in and out of this ETF, it either adds them or deletes them. And from the 2022 lows, you can see it's 1,000% gain. But this is one I want to start adding into my long-term portfolios. But you know what I'm going to do? We get down 10%, I'm going to start buying GDLC, Granny, TQQQ, and then I'm sure there'll be other stocks involved in it. But for now, it's a risk-off environment, short-term to intermediate term. After the 3rd week of October, I welcome a tradable bounce, but until then, hands off for now.